Hello guys, this is Shahzad Rabbani. This video is only for educational purposes with regard to foreign exchange trading. This video is about a trade setup view of coffee commodity. It would be applied on a daily chart and starts trading from 15th of February 2017 onward. This is swing trading setup, right? So if you want to grab the result in full length, what need to have at least a month. So I strongly recommend, if you want to have the exact strategies output, you may need to have in a month, right? So let's jump into the chart. As this pair, this is the live coffee chart, right? As you can see, this particular commodity has a very swing high and lows because of the strong fundamentals and demand and supply, and because of it is a tangible commodity. So here one would imagine that I may be having another strategy or something else. No, I don't know. Actually, I just need to apply the same strategy which I have been, and which you may be seen in my previous videos. Let's start proceedings. I just assume to read this market right from this particular point. I'm talking about 26th of February 2015 onward, right? 2016, sorry. From 26th of February 2016, right? So I need to know the basic swings, a point where the market has stopped and price were rejected on this particular point in buying trend or in a sell trend, right? So as you can see, this is a buying trend as buy, right? This is the sell trend, sell. This is the buying trend, buy. So this may be called a swing, and every upper point in terms of buying, we may call it the pivot point. Here you can see this is the pivot point, right? I assume that this is the first high, right? From the reading of my price action from 26th February 2016, and on the 22nd of March, right? This is the 22nd of March 2016's high price, where the price were rejected and make a low, where the low was exactly, this is the point, this was the low, right? So I would say this is the high, the low, right? After this it has the high, right? This I would call a lower high. Why? Because this high belongs to this low, right? In an upward market, there is a pattern which I very strongly recommend to understand first. I'm not gonna say that you would apply this strategy or to do trades because I have said to you, just prove it to yourself. You can do it by your own. It is not a rocket science, right? So let's come to the point. So why I've called it the lower high, because this high at this point, this high didn't break the previous high, right? So this is the, again, after this posting this high, this was the low, which may call a lower low. Why? Because it has broken this level, right? So this is the high, this is the new high, as it has broken the previous high, right? So this is the higher high. So every higher point in terms of higher market, right, higher points would be a higher high, and every lower point in a buying trend would be higher low. Very simple stuff, right? After posting this was the low point that one may call a higher low, because it didn't break this level, right? So you just need to understand where the higher low, or lower high and lower low posts, right? You can see this very easily. First you have to have something like this in order to just identify, right, these points. higher high and the higher low, right? As this is the point, this is the higher low, right? As you can see, in from this period to this period, the market is in a buying mood, right? But it has a stair steps, right? Like this one, the zigzag, a stair step. You getting point? These are the stair step. So okay, this is the high low point, higher low, and this is the higher high. What happened when the market has broken this previous major swing low? As you can see, in this point the market has broken on this level. For your convenience, I'm gonna draw a horizontal line over this point, right? So on this particular point, I just presume that if as the market has broken this levels, so it has the new low. Either the market is in compression or in a sell mode, right? Or I mean, either the trend changing, the buying or bull trend has come to an end, and we are gonna shift of selling trend, or there is a compression, retracement sort of things, right? Usually these things normally come when the main participants execute their previous positions, right? In a buying market, as you can see, in a buying market, right, there are some certain points, right, where the market pushed or pull back, right? As this is the from this point to this, right, from this point to this, from this point to this, right, even before this, from this point to this, from this point to this, after posting new high, it is a normal pattern of low, but that low wouldn't break out the previous low, so that we can call it as a buying trend, right? So what happened with coffee on this particular point? If at this candle, right, you can see the market has broken right, this level, so we now call this low a new low, which is a lower low, right? This is the lower low. Getting point? Good. So after this low, it has it is basically presume to have a lower high. So this was the lower high, right? After this, the market has posted the new swing low. This is the higher low, right? This low didn't break this particular low, right? But as this particular point has broken, so we can call coffee is now in a sell trend. We see coffee in the coffee's price gonna go down, right? So we would assume to have a sell order, right? For this we need to combine these 2 points, right? This is the lower low points, right? This particular point, this is the lower low point, right? So we need to connect this lower low point and the new lower low point. This is also a lower low, right? A higher low. At this point, this is the higher low because it didn't break this particular low, right? So we put a trend line. The trend line should be on an upside. The angle should be on an upside. So when the trend line break, right, so you will be sell on this order. So if you find market breaking this level as soon as this level this particular level, don't break, don't need to jump in for sell. So if this market is gonna down and break this upward trend line, make sell. So at that time your stop loss should be above of the previous swing high. That was the previous swing high, so couple of points above would be your stop loss, right? And at least for example, if you just jump in on this level, so from this to this there is your risk, and at least doubles your would be your reward, right? So this is my trade. If you have any question or query, please don't hesitate, just ask me, right? And if you like my video, please do subscribe. I do really pardon guys, because I don't have proper instruments to be recording, as you probably hear the voice of azan and other things. So I hope you people won't mind it. The aim, the theme, the core points of this video is just to provide you an educational view or a particular view of this particular pair or any other pair or this particular instrument, right? So that you can manage your investment accordingly, right? So as if the market would break this level, right, at somewhere around, you may call okay, at this particular point at 141.54, go short. The stop loss would be at around 159.40, and the double of this risk would be your reward. First scenario and second scenario, after posting this low, now one would assume a lower high. Now I'm assuming that the lower high has posted, but nobody exactly knows what would happen. It maybe happen to come up, but that high should not be upper of this particular levels, right? So as long as this levels won't break, go sell. This is the coffee trade of mine. If you have any question or query, please do not hesitate, just write, or if you like this video, just subscribe and do inform to other traders community. Thank you very much. Have a nice trading.